that we're on air? Okay, we're on air. Good morning and welcome to the Trading Wife Stock Market Chat and Charts. It's a lovely sunny morning here in Northern California, as you can probably see behind me. It's the afternoon there for you folks who are on the East Coast and on the normal stock market time. Of course, I want to thank BTFD TV for providing this venue so that we can have these shows every week. I think that certainly the group in my chat room has been enjoying it, and for those of you folks who have been joining us out there from Twitterland, I appreciate that. Thanks for watching. Thanks for catching up later on the videos. One of the great things about this is that you don't have to watch while we're doing it live, because BTFD automatically records and puts out a video after a little while, and so I'm able to share that for those of you who can't be here when we do the show. For future reference, it does happen at 9 a.m. Pacific Coast time, which is noon Eastern Standard Time on Thursday mornings, or Thursday noon time for those of you back east. And if you're in other parts of the world, you'll have to figure it out from there. We will be adding some shows probably in the coming months. I'm not sure if I'm going to do a Tuesday, Thursday, or a Thursday, Sunday, or possibly a once-a-month Sunday evening before the market weekly chat session. But I think that these are going over really well, and finally getting the hang of the technical aspects, not having too many technical difficulties doing this at this time. Make sure everybody can hear me. Didn't see anybody say anything about not hearing me, so I'm assuming everybody can hear me and the sound is good. For those of you who don't know, I do offer a service online that includes a chat room, and you can find me online at thetradingwife.net. That's www.thetradingwife.net. You can send me an email at thetradingwife@gmail.com, and I'd be happy to chat with you about the service that I offer. And for those of you who need more than just a chat room and more one-on-one time, I do offer that as well. I actually have different aspects to my service that I offer. It's not all listed on my website. I've worked with some folks individually to work out individual membership plans for them so that I can work with them to the level that they need for me to work with them. Also on Twitter, you can follow me at The Trading Wife. Boy, it's been a tough year in the markets, and I am down for the year. Of course, the markets are also down for the year, so I'm in good company. As of today, the markets have given back enough to be down for the entire year, although they are approaching, maybe it might have actually, did we come back up to, it looks like we might have come back up to end of 2014's close, which was at 205.56, I think it was, and we're now at 205.59 or 60. So we've come back up a bit from this morning's bottom. We did lose the year's gains completely, and now we're sitting at about break even from the end of 2014. So without further ado, I'm going to go ahead and move on to the charts so we can take a look at those. Excuse me, but I have to put on my glasses because I'm getting old. All right, let's see here. Going on to the charts. And there is the SPY. So Sylvan posted a link in the room to a CNBC video. The video didn't actually say this, but it was really funny that the title said, oh, investors are worried because there have been 3 black crows. And those 3 black crows are supposed to be this candle from Monday, then this candle from Tuesday, and this candle from yesterday. So certainly yesterday definitely counts. I would say even Tuesday's candle has a longish black body, red body, although not as big as yesterday's, but that's still a nice nice is an interesting word to use, I suppose, but certainly a longer body than the wick. However, on Monday, that's not a black crow. That body is shorter than the length of the wick. Maybe you could call that a shooting star, although it's not quite at the top of this range. I think this is actually a higher high here, 211.27. Yeah, so it's not really a shooting star, but it's certainly an inverted hammer candle, a shooting star type candle. But we don't have 3 black crows here. That is not a first black crow. And certainly we're not putting one in today at this point because we've come up from the bottom, as I mentioned. And I wonder why this doesn't list the price on this one like it does on the other one, but it doesn't. My other chart, I see the price there, but this one's not listing it. But that is, I had put that in to match the December close of 2014. That's over here of 205.54. So I have that line set at 205.54. We're just a few cents above it at this point. We had lost the low, or lost that that close of the year again, because we had lost it back here in March. We've really been having a hard time staying in profits so far in 2015. And the moment we get a rally started, it falls back over, it rolls back over. This one wasn't bad. It did last at least several weeks, but usually, you know, a rally, once it confirms and turns my timer to green, will last several weeks. So these rallies are shorter and fewer between, and are rolling over, which definitely lends some bearish looks to this market. We've been having such a struggle getting out of these ranges. We chopped in this range from December into the beginning of the year into February, and then we finally seem to have consolidated that move from the end of 2014 and started to rally up, making new highs on the S&P and the Dow. And while it doesn't look like we made a new high here in SPY, as I've mentioned before, that spike day back in December I believe to be an anomaly. So I believe this was still a new high. Certainly it was in the actual index, which is the S&P 500, Standard & Poor's 500 index. This SPY is a derivative of that, and it trades. It's an ETF, so it's not as accurate a measure of the actual components within the index, because it also trades on its own. So you can have a rogue trade here in the SPY, or some weird contracts expiring because it's all based on options, derivatives, and then you have these odd moves. But if you look at the S&P, you'll notice that there's no spike over here. So we did make a new high, and then we were unable to make another new high from that new high in February. This time around, we turned over on Monday, and if you look at this, interestingly, if you look at the actual S&P, we were looking at the SPY, but let's take a quick look at the actual S&P. You can see that first candle is definitely not a longer bodied candle. It is the high of the range. So in this particular case, that does look like a shooting star candle. Definitely not 3 black crows. You have a shooting star and you have follow through days from the shooting star. You have confirmation of the shooting star and then follow through, lost the 50-day moving average, and now today's low, which dropped below the close of December, is coming back up to about break even. I'm sure that's the case for over here as well for December. Yeah, closed at 2,058.90, and we're at 2,060 and change. So just above that, just coming back to trying to stay positive for the year. All right, so that is the SPY. Looking at a couple of the, I don't have a lot left in my portfolio. I have this Apple, which on the daily has lost the ADMA, but because I'm trading this on a longer term, I'm sticking to this weekly chart here, which has held the 8-week EMA. And this candle this week so far has tested it and then come back up. There's a clear line of resistance here, but it's a bullish looking chart overall on this weekly, even though this week's candle is currently red. Again, I point out that it has held the ADMA, tested it, came back up, and I think that it's working hard to, it's Apple. you look at this overall, I really felt like I really wanted to get in to the Apple, because this is, you can't deny this uptrend in Apple. Certainly overall from 2009, dipped during 2012, found another bottom in 2013, and has been in an uptrend ever since. If you look at these little zigzags in here, this is a very natural zigzag. I expect this to continue higher from here with this pattern. Really like, too, the way it has is holding this 8-week exponential moving average. Also in the Western refiner, there's the weekly chart, a little bit far away from that ADMA, a little bit extended in there, so slowing down to let that catch up. The fundamental idea behind refiners right now is that low oil allow refiners to make a larger margin. Now, we did have this breakout here yesterday, and then it fell back in, and now has come back down to test that T-line, that ADMA on the daily chart. But so far, I think it's holding up, and going to keep that for now in my portfolio. This tile is a little more disappointing. I thought that it would hold up yesterday's hold of the ADMA. However, officially that's now a sell signal, because there are these dojis here, followed by this bearish engulfing candle, creating a bearish left-right combo that today has confirmed. So this really needs to recapture that ADMA today for me to hold on to it. I'm still in slight profit. I never really was in very big profits on this, 2 to 3%, even when it came higher. So now I'm in 1%. I would rather give a stock room to move than take 1 or 2% in profits. For me, if I'm taking 2% in profits or a 1% loss, it's not really either here nor there. Either I'm taking, I prefer 10% profits, but certainly 6, 7, 8% profits, or I'm taking half that in losses. It's been a tough year, though, because these rallies haven't held and these signals haven't held, and so that has made it difficult to stay in profits and be in profits, especially with the market timer, adhering to the market timer. And I strongly believe that the market timer keeps me more safe than not. But because this timer has been so choppy in here, with the market being so choppy, it's been difficult to stay in profits this year, as it has also for the market. So not surprising. Definitely the timer is red now. Obviously, it's trying to make a comeback here on the SPY. I'm taking a quick look at the other indices. The Dow looks about the same. The Qs as well came back above, lost that trend line, and then came back above from here. I think this goes back to was that October's low. Let's see if we can get back out here. Yeah, October's low to February's low, and then lost that this morning, but have recaptured it, just sitting just below the 50-day moving average now on the Qs. So has some work to do. Certainly, this is all fairly bearish looking at this point. Timer is red. Could these be putting in a bottom today? Sure, they could, but we won't know that until it's confirmed, at least tomorrow, and possibly ongoing in the next couple of days and into next week, rather, because these big candles did a lot of damage on these markets. You can see in the IWM that definitely does look like a shooting star candle, especially with the double dojis there, and then the gap down, making it a bearish trader's best friend. These are not happy looking indices. That said, volatility is surprisingly not taking as big of a hit as you'd think it would after those three. There was three down days in the indices, and yet we only have one down day in this XIV. So that's really interesting. That shows us that there's not as much fear in these markets, even on this downtrend, which may be an indication that we're really not going to continue lower, but going to put in bottoming candles today, and that's going to be the end of that, because obviously this XIV is not looking bad in here at all. And I'm grateful because I didn't have the chance yet to get out of my half. I want to get out of half of my position at break even to reduce the risk, because it's just been too long coming. And again, I didn't quite get that chance to do that here. Thought I was going to have to wait for another cycle, but it looks like it might give me another opportunity here. So that'll be interesting to see. Okay, coming back to, so that's all my positions, my 3 little positions. Coming back to some requests in the room. Okay, now I need to find them. I had 3 requests here from Raj. Where did they go? Give me 2 seconds here. Sorry about this. Unfortunately, I let it get too far away from me. And now I need to find it again. Ring the bell. Maybe you can ring the bell. But I don't know if that's for me. Sorry, guys. Give me 2 seconds. 2 seconds here. I guess there's been a lot of talking here in the room since those requests were put up, and I thought I would be able to just grab them real quick. Okay, here we go. First one is URI, United Rentals. That's not a bad looking chart, Raj. Certainly you have this bullish engulfing candle in here after several dojis down in here, and a nice rounded pattern higher than previous lows. You're making higher lows in here. Certainly it looks like it wants to push through these moving averages. It has all these moving averages bunched up here. When this 8 EMA, my 8 EMA is always the red line, crosses up through this 50-day moving average and this 21 moving-day moving average and this 34 exponential moving average, that will make this a rounded bottom breakout. Rick Sadler's rounded bottom breakouts. And that should take it, near swing high around 96. If it gets through 90, it's surprising here that it got this high and didn't go to 100. Usually if it gets this high, it's getting ready to do the $100 roll, but it rolled over here instead. So definitely one to keep an eye on. I don't think I would enter it yet. Certainly, again, my market timer is red, so don't recommend entering longs when the market timer is red. Let's talk about that for a second, just to remind you guys. Going by the 80-20 rule, the idea is that when the markets are going up, 80% of their components are going up, which is why they're going up, and maybe 20% are going down, and vice versa. When the market's going down, 80% of the components in those indices are going down, and maybe 20% is going up. So to keep the odds in my favor, I like to be on the 80 side of the 80-20. I figure I have an 80% chance of the stock going the right way versus having a 20% chance of the stock going the right way. So that to me is more like a chance. I don't want to be where I have an 80% chance of the stock going the wrong way. So that's the point of sticking with the overall market trend and using the market timer. So I don't go long when the market timer is red. Will sometimes go short when the market timer is red, but I tend to want a lot of confirmation. Markets are made to go up in general, and so when they correct, those corrections can be quick and short-lived. An actual true bearish market is less common. I'm happy to go short in an actual true bearish market, but I'll explain on the charts in a minute here why we're certainly not in an actual bearish market right now. My timer's red. I have my little bear suit, hanging up across the room there, and certainly I'm not taking any longs, but that timer is red on the daily charts and not longer term. And so I'm not a really quick trader. I don't like taking quick trades. You certainly can take shorts when the daily market timer is red, but you have to be nimble and vigilant and be ready to take those profits, because those can turn on you pretty quick. Okay, going back to the chart. Get my glasses back on. I don't have, I need to buy anti-reflective glasses, right? Okay. All right, back to the chart. So let me show you what I mean on the SPY. As far as, okay, obviously we see this is rolling over. It looks bearish on this daily chart here, right? But the moment I zoom out, what's the trend? The trend's still up, right? The moment I put this on a weekly chart, the trend is definitely up, right? So this is not a bearish market. This is, a Dow theory says, you know, you have a major trend, and then you have the minor trends within the major trend. And we can see these minor trends, and October was certainly more menacing than, I'm going to take this trend line out of here, than the recent, you know, little corrections that we've had that we're sort of getting really, a lot of folks are getting all doom and gloom about. But even this October correction, it was a little correction, but it's still within this uptrend. We never lost this uptrending channel that we've been in since 2009, since the bottom of 2009. You know, this comes way out here, 2009. There's the bottom of channel of this channel. Come on. That's the problem with using this Asus computer for this. Here's the 2009 bottom. You have in 2011 another bottom that created this trend line that it then touched in October of this year, and there's that channel bottom. So have a long ways to go before we lose that and actually become a bear market. So I don't like to go short in an overall bullish market that's pulling back. That's too quick for me. These moves are too quick for me. Generally, these moves higher tend to be longer. We tend to get a longer rally in here. I really thought this was going to be enough of a correction with all of this sideways stuff to get a longer rally going in here. But markets are sketchy. We're having a hard time rallying. I think there's a lot of stuff that's keeping us from doing that. There's a fear of interest rate hikes from the Fed, even though they said that they weren't going to be impatient, and even though they said that they wanted to see a lot of better data. Markets are reacting to good data to bad data, and it's sometimes backward pants day, and sometimes it works and sometimes it doesn't. But that's just par for the course here. And the moment you think you have a handle on which way the markets are gonna move, they will confound you, because that's what the markets do. They make a fool out of you and me. So so that's why we just read the charts and stick with the signals. And sometimes there's no money to be made, and that's just how it goes. And you wait until that money is there to be made. And as long as you're keeping yourself safe and not gambling and losing your shirt in the meantime, you should be fine. All right, let me take a sip of water here, and then I'm going to put on the next request from Raj, which is BDBD. So this certainly looks like it's trying to put in a bottom. It has a lot of work to do. It's running dojis just under the ADMA. So it's hard to say. It's sort of got a rounded look here. It almost looks like it's a dreaded H pattern in here. It's hard to say if this is going to try and make a move higher through these moving averages. Right now, all moving averages are descending. There's the 200. The 50 maybe is trying to flatten out, but right now they're all descending. And what I'm seeing here is a test of this ADMA and an inability to get through it and stay above it. The ADMA being the red line there, my trigger line, the T line, as most of you know, that I started using when I was studying under Stephen Bigelow, and he got this from his student Rick Sadler. By the way, if you talk to Stephen Bigelow and say, "Oh, the wife was your student," he doesn't really know me. He does follow me on Twitter, but I was a silent student, as it were. but I did use a lot of what I learned from him in my strategy. And so I do talk about that a lot. Learned a lot about candlesticks from him, and learned about this ADMA, this T-line, which was, again, developed by actually another student of his, Rick Sadler, who also uses it. In any case, I would say that at this point, this BDBD is really having trouble getting through that T-line, and looks like it's going to be maybe rolling over. Looks more like a dreaded H pattern than anything else. This could have been a bottoming candle. This could be telling us that it's done going down. But until it gets up through that ADMA and closes above it, and these moving averages start to turn up, I'm not too keen on going long this stock. INFA, wow. So INFA is certainly making an effort. It looks like it's finding some support on this 50-day moving average, which is rising beneath. It lost the ADMA yesterday, possibly the day before. Nope, it closed above the day before, so it closed below for the first day yesterday and is getting bought back up, is now back up to it. I want to see that close above, though. It could just be a test of that. This could be a dead cat bounce before it goes lower. So I would say it needs to get back above that ADMA and close there and confirm that it's going to go higher tomorrow before it gets considered as a long. And, of course, until the market timer goes green, I don't recommend any other longs. Anyway, Apple, we already looked at. Some folks buying off of this bounce on the 50-day moving average. This is one where I would say, just from fundamental perspective, they have so much cash and they keep putting out great products, and I think this is a great company to own longer term. So I don't blame you for buying the dips here when it starts to bump back up. Another one we talked about this morning, CBI, which I found when I was going through my volume surge scan over here. You see that says volume surge, and then there's the CBI. And when I saw this pattern here, I sent this into the room. This is one of Rick Sadler's rounded bottom breakouts, because the ADMA is crossed up through all these other moving averages, the 50, the 34 EMA, and the 21-day. I think he actually uses the 20-day. I use the 21. That's Fibonacci number. And it has the 200-day above. I think that's about 12% higher. So likely to tag that on this breakout here of this J-hook pattern as well. So that's a nice looking chart. Again, you know, until the markets turn green, though, I don't really want to get in on any other longs. Let me take a quick look here through the, let's see. Nobody's comes in. You guys don't come into the chat room on the TV thing, do you? So let's see what you guys are looking for. ADT from Doc. Nice bounce off the T line. Yes, indeed. Really nice looking chart there. Doc looks like it's it did this nice curvy pattern here. Looks like it's gonna J-hook higher again here as it bounces off the T-line. Very nice one. Okay, request from Lance. We have EOG. We were talking about oil stocks earlier because, well, oil's been, you know, obviously beaten down tremendously over the past year. As we all know, the production has exceeded tremendously levels of consumption. We're now making a ton of oil here in the United States, and we are all consuming less of it. So oil has been beaten down to below $50, into the 40s. Lots of folks calling for the 30s, the 20s, the 10s. Tough to say, because these there's just so much that goes into, so many factors that go into where this oil is moving. We keep seeing interim bottoms. I think, you know, I mentioned a couple weeks back that my oil timer went green, but again, these moves aren't holding. they're going up a little bit and then coming down and turning it red again. And then maybe they'll do this and then they'll do this, and these moves really have been difficult to trade for a swing trader. I think they've been fine for shorter term trades, but these moves are struggling to hold. By the time they confirm, they only have a little bit further to go before they pull back. So I'm feeling a little skeptical about these oil stocks. This one in general, how does this look? You have a downtrend, certainly here, from this top, and you can see that that's a downtrend right there. Looks like it's bottomed here with this sort of doji candle down here and came back up through the T-line, then lost it again, then came back up through it. Now is holding the T-line, struggled at the 50-day moving average, got through it, pulled back off, rejected it, bounced back off the ADMA, and is now crunching that ADMA and that 50-day moving average. Started to push up again back through it this morning, has lost it again. I think that you're looking at running into resistance on this trend line as well. So I don't think this is one I would go long here. That's not very far to that trend line, only about 2%. So I think that I would lay off of this. Certainly we can keep an eye on all of these oil stocks, but this is not one that I would grab right now. UNP, I know that also Sylvan has been watching CP, which is the Canadian Railroad. They're putting in hammers today. So they gapped down and have put in hammers. Both of them, I believe, are doing the same thing, right? Oh, well, CP had a hammer, but it's not really looking like a hammer anymore. It's starting to get a little more bearish. It's starting to sell back off. We can keep an eye on these because it could be a bearish doji sandwich in the making, kind of like this one, or it could be a bottoming candle. So, it'll take a couple days before we're able to tell that. Would I go short this here? It's not pleasant that it lost that 200-day moving average. It might be going lower. What does this line take it? Oh, that's interesting. So that could be an area of support there as well. I don't think I would go short this here. It seems a little extended to the downside, and I wouldn't go long either. I would just keep an eye on it. Overall trend is still up, but it's not a very nice looking move today below the 200-day. Just need to see if that's a bottoming candle in the coming days. CRM. Salesforce.com. Well, this isn't, longer term, you can see it's just sort of been in this range in here, right? If I pull in, this looks like it's mostly rolling over, right? More bearish than bullish, certainly. Made a lower high here from here. This sort of rolling M kind of looks like the markets, but is now putting in a hammer candle. After testing, that's the 34 EMA there, but is still certainly below the T-line as well as the 21-day. Nice to see these rising moving averages, the 50-day and the 200-day, but again, you want to see some work on this, some confirmation that it's going to get back up through that T-line, through that ADMA. Would I short it here? Again, I would have to say no. You probably have some support there at 63.55. I mean, they're such small moves. I don't think that the risk reward is really in your favor to do that. G-Pro looks okay. This is one of the few that actually, I know that Lance, you got into this a few days ago. It broke this very long-term downtrend in here, right? I mean, you're talking about couple months worth of this downtrending channel, and it managed to get back up through that. It has another downtrend to deal with, but it's so far away that if you move to that as your resistance, you're in really good shape. You have the 50-day moving average here, so that's probably your next spot of resistance around 45. So that's only about $1.50 away on a $43 stock. That's not a huge move to that 50-day moving average, but I believe you're in profits from here, right? I think that you, let's see what else you got up here. I think that you had a nice move from here. I'm not sure I'm going to ask you right now, what is your position? Clearly a nice bottoming spot here, right? I mean, it just really, I would say that watch for that 50-day moving average to be resistance. Maybe take off half when it touches that and see if it gets through. You can always add back on confirmation, or lock in your half profits at the 50, and then if it rolls over, you get out the other half and you've locked in that nice move half. Or if it goes through, then you can always add back or just let the second half run up. Sold for 5% this morning. Got it, market safety. All right, well, there you go. Then I'm not going to talk about it anymore. If you were still in GPro, I would say to stay in it because it's one of the few better looking stocks out here right now. Whole Foods Market, it's in a downtrend. It's putting in a green candle today. It could easily just be a dead cat bounce. It's well below the ADMA. It's extended from it, so it could just be testing that ADMA to get back to it. If this tested the ADMA and then started to go down again after testing the ADMA, I'd say this could be shorted all the way down to here. You see, there's no support until you get back down to here. I guess you could say there's some volume at price maybe around 40. See, this is the problem. These moves are just so small. You take it to 49.90. It's a little more than a $2 move in a $50 stock. It's not a big move. So risk reward on the short side is just not great by the time it confirms. If you had gotten short back here, now you had these doji candles and then this bearish engulfing candle giving you a left-right bearish combo. If you'd gotten short there, that would have lost the 50-day. It couldn't get back above it. It rejected it again here. Then you would have had a decent move. You would have had $4 or $5 move, 10% almost to that $49 number. But at this point, I think all you can do is watch to see if it's going to reverse, because we don't know how long that short will go further. Wait, what was the other one that we were talking about that's been doing so beautifully that I hope some of you guys are still in this Twitter, because there's really no reason to get out of it. It not only held the ADMA, but it's still well above it. It's holding these breakout levels. Lost it slightly, but had held the longer term. This is like a weekly breakout level here. Hold on, let's go back to the weekly chart. Whew. So you see that there's that breakout on the weekly chart just happened this week. That it pulled back a little bit is really not that big of a deal. It's also holding that breakout. It's holding two breakouts here. So I think that it's a really, really nice looking chart on both the daily and the weekly. And if you're in this, I would stay in it. As my timer goes from red to green to red, we'll see what happens when it turns back green again. I had too many positions on when this buy was showing itself as a buy, and so I couldn't take it. But I know a couple guys in the room did, and this was a really good spot to take it, and it's clearly holding up there. I would hold it at this point. LYB, yeah, that's not a bad looking stock there, Lance. Not a bad looking chart at all. I like the way it's rounded here. I like this bullish engulfing here, and then you have some consolidation candles above the ADMA, and looks like the ADMA has crossed over the 21-day as of today and is already through the 50 and the 34E, so that makes this a rounded bottom breakout going to the 200-day of 93.63. It's not a huge move, right? It's only about $6 in an $87 stock, so 7-8%. But I think it's definitely has the potential of going there. Risk reward is easy because you have only $1.50 to the T line, so you're risking $1.50 to make $6, and that's pretty decent risk reward. Let's take a look at this on the. I like this look here too, right? Overall, like from pulled way back in October, November, December, bottom, started making these higher highs in here. Looks like there's a trend line that would go from here. So it started to lose this. I would say that, you know, your trend line starts here with these two candles, those first two candles there, being December 15th and 16th, started a trend line. Then it lost it on January 14th, but recovered it and closed back above, then continued to create and hold that same trend line from the end of January until this month. So you have a nice trend line up there. It really looks to me overall that this is a rounded bottom. Taking a look at this on the weekly chart, I think we'll see that a bit more. So there's that trend line, and you can see that this is definitely trying to come up here. Actually, on the weekly chart, though, I have to say it almost looks like it could be bearish. It almost looks like it could be, you know, this could be a little bear flag in here, that this is a dreaded H pattern, but I like the way it's turning up now. Because my timer is red, and because it's, you know, really needs some confirmation in here. We don't know if that's going to get through that 200-day, which is, I mean, again, I think it's decent risk reward. You risk $1.50, you make $7, but you know, it's up to you. I mean, the timer's red. I prefer not to put on anything as the timer is red. Lulu, okay, Lulu from Doc. One more nice setup. Yes, that is a nice setup. Obviously, yesterday's candle had lost support, and it's come back up through all these bunched up moving averages after taking that big drop yesterday. Would I buy it here? Well, my timer's red, so gonna have to say no. I don't like these candles in here. Those were pretty menacing after rejecting all those bunched up moving averages, but now it's getting bought back up, so maybe that tells us that they're buying it up and that it can do well. You have resistance right up here around 68, 69. Again, my timer's red. It's a decent. I like what it's doing here today. No question about the fact that it's coming up through all these moving averages. That's a really nice look. Let's see what it looks like on the weekly. Might look pretty decent on the weekly. Yeah, so see, it's kind of, you have this big sort of cup and handle on the weekly, and it is J-hooking as well here on the weekly, getting back up through that 8-week exponential moving average. It's a decent looking setup. I agree. All right, let's see what SPY is doing before we close up shop here. Nothing really new or interesting. You know, it is bouncing off of that one support level, so it's a great time to just sort of sit on hands and wait things out and see what this market's going to do. Because at this point, we have mostly a bearish look, but it looks like it might be putting in a double bottom at this level. Could very easily be this is a double bottom here, and that it will go higher, that this is going to be sort of like a hammer candle, and that it'll be a bottoming candle, and we're, you know, we're clearly just sort of, again, zigzagging in a range as we had back here in the beginning of the year. So we're zigzagging in a little bit of a higher range, but we're definitely still zigzagging in this range. So we just have to see if this is going to be bottom or if it's going to continue lower, and we won't know that, obviously, until tomorrow and possibly into next week. One thing I do want to talk about is, you know, tech has taken a big hit. Taiwan Semiconductor, the CEO yesterday came out and lowered guidance. And then you had SanDisk that came out this morning, and they pre-announced lower guidance as well. They took a big hit. I think they were down more than 17% earlier when I was looking at SanDisk. So tech has taken a big hit for that. I don't think that's the only reason the markets have pulled back. Obviously, yesterday it wasn't just tech that was taking a hit. Overall, the markets were taking a hit. Lots of stuff going on in the world. As usual, it seems that there's always a lot of stuff going on in the world. And I do want to take a moment on that note and say how sad I feel for the families of the Germanwings Lufthansa flight that crashed in southern France, because it wasn't an accident, which is, that's just, it's really hard to wrap one's head around it. I think that we're going to find out more about the co-pilot who took over the cockpit and purposely crashed the plane, possibly. It's an act of terrorism regardless of who he's associated with. I don't think we know at this point. He was a young German pilot. If he was associated with any specific terrorist groups, but certainly it's an act of terrorism, and my heart goes out to the families of those victims of that plane crash. So I didn't want to leave it on a sour note. I probably should have said that earlier in the broadcast, but I didn't think of it till now, so I said it now. That said, not really sure if there's anything new. What else did we see today talked about in the news? Oh, it's mostly about this Germanwings co-pilot sought to destroy plane. This is truly sad. Other than that, I think that pretty much covers it. So again, if you want to send me an email, it's thetradingwife@gmail.com. Oh, one more. Hold on, Lance has one more ticker to look at, so I'm going to put that on. Okay, there's back to the charts, and you would like to see gold. Well, would you look at that? So this is the Spider Gold Trust ETF. I don't know if it's really an ETF, but it's like a fund. Obviously, gold is going higher. What do some of these other gold stocks look like? I haven't, see, the other ones not necessarily, right? They haven't. What does Nugget look like? No. So this GLD, that's really interesting with that sort of, you have this doji that was a gap up. Yesterday's candle gapped up from the previous day's kind of hammerish doji, inverted hammerish candle as well, creating a trader's best friend. That's a bullish chart. I mean, you can't get in it because it's so far extended at this point. It's too far from any of these moving averages. It's gapped up to here. Who knows what it's going to be? It could be setting up an evening star and then gap down from there tomorrow and come back down to the ADMA, or it could continue to the 50-day moving average. It's not really something you can trade at this point, but it's certainly worth watching, and it's certainly possibly saying something for metals. What's silver looking like? What is the SLV chart look like? Oh, that's kind of a really nice looking chart, actually. Look at the way this had consolidated here after pulling so far away from the ADMA, getting through the 50-day moving average, staying above, and consolidating a bit, and now it's starting to pop back up. Looks like it's going to head for the 200-day moving average. It's not a big move, though, at only about 73 cents, so not something I would recommend buying here. Certainly it's probably too far from that ADMA anyway. But I guess metals may be getting shiny again, and we should keep an eye on them, basically. So we'll just leave it at that. Metals are getting shiny again, and we should keep an eye on them. So that's about it for today, guys. Again, I recommend sitting on hands. I'm going to be managing the few positions that I have. For now, it looks like I'm going to be able to hold on to them. But of course, I'll keep an eye on them as the day progresses and make decisions as they need to be made. But for now, I'm going to be sitting on hands. I'm not going to be adding any more trades, either long or short. and that's what I recommend the rest of y'all do too. While the timer is red, while my market trading timer is red. Okay, I hope everybody has a great rest of your day and a great weekend this weekend, and good trading, everybody. Stay safe out there. Thanks for watching, and thanks to BTFD TV. Have a great day. Bye-bye.